Good morning, everyone. Welcome to our Tuesday morning trading room. Hang on here a moment. We'll get the screen share going on. Yesterday turning out to be a very flat day, as we pretty much anticipated after that early morning rally. The market really spent the whole rest of the day in this very tight little sideways range, making a breakout eventually during the Asian session. So we had this nice little breakout and retest, and there was the follow-up signal. Didn't go all that far, enough to hit our profit objective, I suppose. And fairly quiet through the overnight European session also. Slight gap here to the downside. But yeah, kind of an indecisive market here at the moment. This, of course, the NASDAQ that we're following here. This is the daily chart on the NASDAQ, and you can see we had two very strong rally bars. Volume was a little bit light, which makes you wonder what in the world is pushing the market higher. Normally, you want to see a direct relationship between volume and the amount of activity on a day. So a big bar should demand big volume. Small bars should have small volume. That's normally how it works. So when you're getting fairly large bars, and obviously bullish bars, but the volume's a little bit light, you might want to wonder what is going on with that. All right, we're getting our first in sync eagle signal. For those of you who like to take advantage of that early signal, there you go, a nice little red bar buy off of the hard edge. We'll see what kind of follow through that produces. I'm not usually that brave, but this also gives you a second push opportunity, which simply means that we allow the signal to engage. We see where the market flinches, and then you can set up your buy order. The idea behind this first in sync eagle signal is that we try to take advantage of some early momentum. You could even set your entry here above 75.91 quarter. That would flip the ATR line if the market closed above here, so that would even make it a little bit more predictable, perhaps. You Raptor owners need not feel left out. You can do the same thing here on the Raptor. You can look for your first in sync signal. In this case, since the bands are stacked in a bullish fashion, we'll be looking for that first buy signal. I think I did get filled there on that eagle signal. So we'll see now how the market performs as we get back here toward the overnight highs. Oh, big push through there. This also had the advantage of having a little bit of a bull flag flavor to it. You know, kind of that push up and that little pullback. Let's see if we can get the trade to break even now. I'll actually bring my break even in a little bit. So if this bar advances, we'll get the break even. And where's the next? So we're at the primary resistance line. 76.09 quarter is the next secondary resistance line. And that's pretty much where my profit objective is. A little bit shy of that. Now that the trade's at break even, it's a little less stressful, but of course, I'm definitely within stop out distance. Ah, darn it. I thought I was going to ride out that swing, but not quite yet. In fact, we're getting the sellers, it looks like, pushing back really hard on that breakout. Back now inside this trading range, well, the overnight trading range, I suppose. All right, well, we'll just wait for a setup here. Rick asked Eric, at some point today, can you say something about how we get tick sizes on other instruments, crude oil, FX instruments, etc., and also the setting parameters for the Raptor cloud? Absolutely, Rick. First off, 99% of the time, you will be using the default parameters. Normally, if the instrument trades at $10 a tick or less, the default parameters will work just fine. You'll know you need to do something with your brick sizes when you open up your chart and your daybreak lines look something like this. You're having like 4 days displaying here on your chart. Well, obviously, you can't day trade that. When you do that, if you open up your chart like that, you're going to realize that, hey, I need to do something with my brick size. Conversely, if you open up your chart and you look at your timestamp here along the bottom, and it says like 6:30:02, 6:30:07, 6:30:15, 6:30:34, 6:30:51, 6:31, 6:31:10, and so on. That tells you your data is unfolding too quickly. You know, you barely have 2 or 3 or 4 seconds between the bars printing. That means the data flow is too fast and you're not going to be able to make any trading decisions. When that happens, you also need to adjust your brick size. Now, as I said, 99% of the markets you'll trade, the defaults are going to be your starting point. The Raptor has the advantage of being tweakable. The rest of the DTS package, the Hawk, the Falcon, and the Eagle, the programming is all locked. You can't change any of it except the brick size of the market you're following. With the Raptor, however, we opened up some of the programming so that you could, well, quite frankly, you could tweak it to your liking. But that said, 99% of the time, I always recommend you go with the defaults. So many people write me say, hey, Eric, what should I be using for crude oil and the Russell and the mid cap and on the list goes. And I will write back, use the default settings. The notable exception is the E-mini S&P. And perhaps the easiest way to show you this is, let me load the E-mini on my other chart and we can do a little comparison here. The E-mini S&P trades at 1250 a tick. And unfortunately, it's a very popular market and it falls outside of the normal parameters. So here is the E-mini with the default settings. And you can see that a day like yesterday, you had no high probability signals at all. The day before, you had one, and it looked like it occurred right in the wee hours at 4 in the morning Pacific time. This is not day tradable. So when you open up your chart, if you're looking at whatever market you're looking at and it looks like this, you know you're going to need to make some changes. This is the E-mini with the fast settings. And you can see how it's the same chart, but this is yesterday's session. You can see we actually open up the chart a little bit and there's some opportunities there. As a rough rule of thumb, you want your day to pretty much be at least one monitor width wide. If it's a little bit narrower or a little bit wider, don't fret about it, but that's kind of what you're going for. If your day is at least one monitor width wide, you'll probably get a reasonable amount of opportunities. Yesterday was just a very quiet day overall, but you can see the difference between this versus this. All right. So let's review the fast settings here for the Raptor. We recommend the fast settings of 446. So if you want to make a note of that. So the first thing you're going to do is you're going to change your brick size to 4 ticks. And you do that by going to your data series. And then you will change your brick size to 4 ticks. Next, you're going to go to your indicator window and you're going to find your Raptor 2.0. And now you're going to change your brick sizes on your clouds and your Hawk. So your Hawk will be 4 ticks. Your fast cloud will be 4 ticks and your slower cloud will be 6 ticks. If you're taking notes, this is the rough relationship between the clouds and the brick size. The slow cloud is 1.5 times your brick size. Your fast cloud is equal to your brick size. And your hawk bars are 75%, 0.75 times your brick size. All right? That's a rough relationship. That will expand the chart in such a way that you should be able to produce some signals. Now, the next thing that I do, if I fiddle around with the chart settings, is I look to see how do the signals perform. Do I get an adequate number of signals? Do the signals follow through after they print? Now, counter trend signals you can always kind of take with a grain of salt, but let's take a look at some other signals. So here was another number 3 signal, seemed to work out nicely. Here was a number 2 signal. Okay, it didn't get all the way to the hard edge, but at least it wasn't a false signal. Here was another number 3. Okay, I took some heat, but it looked like it would have worked out in the overnight. So just review a few of your signals and make sure they're performing correctly. Because you can scale down your brick size so much that you'll produce a lot more signals, but they may not actually perform that well. So if you're looking, crude oil has kind of been a little bit slow lately. So if you're looking at your crude oil market and the chart doesn't look like it's offering enough opportunities, the first settings I would try would be the alternate settings, the 446. Gold, I've done gold on both settings, the default settings and the faster settings. What you're looking for is you're looking for a normal chart, and I'm using air quotes when I say normal. If you want to know what a normal chart looks like, just put the default settings on the NASDAQ or the mini Dow or gold or the mid cap or the Russell or practically any other market, and you'll see, how the clouds get a little bit broader, how the signals perform. It's not that every signal is going to necessarily be a winning signal, but that the signals are going to perform the way they're supposed to. You're going to get a reasonable amount of signals printing. Now, regarding the Forex, you're probably going to have to play with it a little bit. I don't follow the Forex markets that much. Hold on a second. Let's see if I can even get one here. I usually default to the futures version. So rather than follow the Euro US dollar pair, I'll follow the 6E, which is identical. Rather than follow the British pound US dollar pair, I'll follow the 6B, and so on. I do know that with the Canadian dollar and the Aussie dollar, you're probably going to have to go to the fast settings because there's just not enough happening intraday. I'm trying to pull up the Euro US pair, and okay, it's not, the data's not rolling correctly, but at least you'll see what it's like. Oh, maybe it is. Okay, so here's the Euro US pair. And this is with the default settings. And so I would take a look, like I said here, at the spacing. How far do I have to go back to find a day? All right, looks like I'm getting loads of data here, loads of opportunities. So then I look at the timestamps. Would I have enough time as this unfolded to make a decision? So these 10 or 12 bars unfolded here over the space of a minute. Okay, that's not terrible. At least the bars aren't breaking down by the second. This formation here took, it looks like, about 5 minutes to do. Okay, that's not bad. This one took a couple, 3 minutes. All right, that's reasonable. So again, the default settings not terrible. It looks like it's fitting the market pretty well. If you don't like the way the default settings work, well, then you can play with it a little bit. Like I said, the Raptor, we made the Raptor so it's more tweakable. Let's say with the Euro now, you wanted to do, oh, I don't know, let's say you wanted to see what it was like at 10 ticks instead of 8. So we'll do a 10 tick bar. All right, so this is what a 10 tick bar looks like now. Now, note how much narrower the clouds have gotten. Okay, so again, you can just double check your signals. Am I getting decent follow through on the signals? Is there something that I can do with this? If I want to adjust my my clouds now, so the big cloud is 1.5 times the brick size. The faster cloud is equal to, and the smaller cloud is 3/4. So you can go 7 or 8. Choice is yours. What you're looking for is just for the system to produce accurate signals. Like I said, the trading is not about perfecting your signal generation. Rather, it's about finding an accurate signal and then employing correct money management to capitalize on that signal. So here is the Euro-US pair now with a 10-tick chart. And you can roll through it and you can do a comparison, and actually it looks pretty much the same. The number 2 signal, decent follow through. The number 1 signal, perhaps a little bit late. I do remember this number 1 signal developing a little bit quicker with the 8 ticks, so maybe that would be a little bit more favorable. Here was a number 1 signal with a very nice smooth progression, and that's, and so on it goes. And maybe you want to take it higher still. Maybe you want to do a 20-tick chart. Oops, sorry. By the way, your Raptor filter, I haven't focused on it, but your Raptor filter is normally the same as your brick size as well. Where is it? Okay, so we're going to change this now. We're going to go with a 20-tick. People get very excited about trying to find the optimal settings for their indicator. Believe me when I tell you that if trading were as simple as finding the right setting for your stochastic or RSI or MACD or moving averages, well, first off, the market would have compensated already. And secondly, everybody would be a gazillionaire. Okay, so here's the 20 ticks. Notice how many signals we're producing. Notice how thin the clouds are. So that tells me that I need to make some changes here. So I'll go back to the indicators. I'll find my Raptor, and now I will again adjust my clouds. So a 20-tick brick. I'm going to have a 30-tick big cloud, a 20-tick small cloud, and a 15-tick hawk. And then we'll see what this looks like. You can see once again, see how we have a little bit more of a normal appearance. You know, I could, if I deleted the Euro US pound here, you couldn't tell me whether this was the NASDAQ or the Russell or the mini Dow, because it has the correct appearance to it. So here we had a hard edge bounce, looked like it had some decent follow through. Here's a number 2 signal, looked like it almost got to the hard edge. Another hard edge bounce with some decent follow through. So right now it's looking like maybe the 20 tick setting is not a bad way to go. We're getting some signals, and the signals are responding. You know, we're not producing signal after signal after signal after signal. We're getting a reasonable amount of signals through here. Looks like each signal is taking about 15-20 minutes to develop, but when it does print, it looks like we can have a great deal of confidence that there's going to be some follow through. Now, this is only one day. You know, you have to do your due diligence. You'll want to review a few days of it, but right now it's looking like, as far as the Euro US dollar pair, a 20 tick chart with the adjusted Raptor settings may not be a bad way to go. Now, of course, a 20 tick chart may put, well, no, this is the Forex. You can adjust your risk as you need to. Yeah, actually, that's looking not too bad. Now, you could never do this on the Aussie US dollar pair or the Canadian dollar US dollar pair. There just would not be enough data. You would have daybreak lines all over the place. You know, it'd be looking like this. In which case you would have to resort to the fast settings. Okay, so that's really all there's to it. Rick, you're full of good questions. Rick's asking a CTA's perspective, merits of Forex futures compared to spot Forex. You know, Rick, there's so many ways to skin the trading cat. At the end of the day, it really boils down to what are you most comfortable with. I focus on the futures a lot just because I cut my teeth trading futures. That's what I've always known. That's what I've always gone to. Forex, the chief advantage trading Forex is the ability to really adjust your position size. You know, with futures, the contract is locked. You are trading, when you're trading a contract, you're trading, you know, so many pounds of cotton, so many bushels of wheat, so many points on the index. It is all locked, and therefore, if you take a trade and you want to enter here and you want to exit there, it's going to cost you $300, and there's no way you can negotiate that. With Forex, however, because you're trading essentially shares, shares are an easy way to think of it. They're called lots, of course, but you can refine this to the point where, shoot, you could put on a trade like this for 30 cents if you wanted, or $3, and still cover the same amount of risk. Now, of course, you may be risking only $3. You'll only make $1 on the profit side. But the fact that you can adjust your risk by adjusting your position size on the Forex is a big advantage, more for the smaller trader. ETFs are the same way. You know, for those of you who can't afford to trade a full futures contract, or you're trading a smaller account and you're not comfortable trading a full futures contract, you can look at the ETFs. You can look at the SPDR, the SPY, which is the ETF for the E-mini. The Qs are the ETF for the NASDAQ, and it allows you to trade shares. So, you know, you could trade 10 shares and maybe put on this trade for $100 if the $300 risk is out of your reach. So there's always an alternative. You know, people come to me and say, hey, Eric, I only have $5,000 to trade with, but I'm really interested in trading. I want to make this work. What should I do? And I'll tell them, look at the Forex markets and look at the ETF markets. You'll pay more in commissions, but it's you know, it's a way to enable you to trade. I think the futures markets, well, the Forex market is pretty pure, but I think the futures markets are more pure than the stocks, of course. Stocks are a little easier to manipulate, especially those stocks that are referred to as penny stocks. Yeah, like Rick says, pure in the sense that they're not subject to easy manipulation. And yes, that's what I'm getting at. That's not to say they're not manipulated to a degree. A fellow about, I guess it's got to be about 40 years ago now, Richard Ney, wrote an interesting book called The Wall Street Gang. And it was essentially how big business, they wouldn't collude on this, but they would have the ability to mislead people, the average Joe, through the news. This is kind of the gist of the whole story. So, you know, they'd be saying stuff like, oh, the economy's going in a tailspin, or, you know, a recession is coming. Like, we haven't heard that before, right? And so people scramble out of their stocks and they buy gold or bonds or whatever. And then, of course, the opposite will happen, and you'll hear, oh, times are good, things are booming, the economy's never been better. And then people scramble to get into the stock market, they invest heavily, and so on and so forth. And then what ended up happening, and this is not a new phenomenon, if you've been around the trading world for any time, you've probably seen this Wyckoff drawing of the life of a market. So down here you have the accumulation phase. This is when Goldman Sachs and the Bank of America and everybody is forecasting that, oh, the economy is in a recession and things are just terrible, and they accumulate a bunch of shares, and then they say, oh, how wonderful the economy is, and then the market starts to rally and they slowly start to sell off their holdings. And then up here is when the hype gets really strong. Oh, the economy has never been better and things are nothing but roses and sunshine. And then all of a sudden, the whole time the big companies, the big guys are offloading their holdings. And then, of course, everything tanks and the whole cycle begins over again. This was the premise of Richard Ney's book, and it's evidenced by the Wyckoff business cycle. Anybody who's been around trading has a hard time denying that this kind of thing happens, even though it's not like collusion. That's not to say it can't happen. Richard Ney, those of them people who called him a fake, he actually called not one, not two, but three tops. Three tops. 3 times the market topped out. He nailed it. So, you know, that's why people often ask me, hey, Eric, don't you pay attention to the news? No, not really. Because I know the news fits the market, not the other way around. The news will adjust to what the market does. The market will do what the market will do. Yeah, like Rick says, show me a chart and I'll tell you the news. Yes, and Rick also makes a good point that the Forex is not easily manipulated except by institutional traders and governments. And that's so true. Like the whole point of the Forex market is for governments to control their currency, to control their interest rates. And they do that very much through the Forex, the foreign currency exchange. And don't think for a moment that banks don't love all the added liquidity from the pikers like you and I. They have no qualms about taking our money. So that was a long way of explaining. I think you just got to try a few and you got to see what you're most comfortable with. You can make money with any of them. You can lose money with any of them. I think you should be careful how many markets you watch. I've seen people try to monitor 6 or 7 markets at a time, and well, I'll admit I can't multitask. I think that would be a strain on anybody. And again, it goes back to that production line mentality, which I think is a mistake in trading. I have a Jesse Livermore quote that just kind of hangs with me. He said, the money is made in the sitting and the waiting, not in the trading, which again is the exact opposite of a normal non-trading world type business. You don't make money sitting around. You make money doing stuff. You make money building your widgets, doing your service calls, painting your houses, mowing your lawns, whatever it is your business is involved in. And yet trading is perhaps more about timing than anything. Yeah, like Rick says, doing nothing is a thing. There's that also that expression in trading, flat is a position. So you don't have to be long or short all the time. You can be flat. Okay, so what are we doing here? We're just kind of drifting sideways still within this overnight trading range. Haven't moved higher or lower. The initial rally did not do much, and now we're making lower swing highs, and we've at least broken this series of swing lows. That tells me there's a good chance that we will see one more move lower. Don't know if it's going to be a big move or a little move, but the potential is there for another move lower. Remember, normally we see two moves in the direction of a breakout. So the breakout being move number one. So now we may see move number two. So here on the Raptor, we're a little bit of a mess right now. You could look to pick up on one of these discretionary signals if you were a little bit more aggressive on the trade. You could try to get in off one of those. Otherwise, you could just wait for the clouds to eventually cross. It looks like the Falcon's actually going to give us an early trend change signal, or a trend change signal here. The clouds, or pardon me, the trend line has changed color. So we got the move that changed the trend line color, we got the pushback, and now it looks like we're trying to get the new signal developing. So there's an opportunity. You could try to short that. We're fairly balanced at the moment, though. All right, and here we come now with the crossover buy, the with trend signal. So the market's getting a little bit between a rock and a hard place, if you will. We got this little sideways deal going on. We've got the signal to buy. I may do an OCO, and what I would look to do is, rather than buy off the number one signal, I would buy a break above there, and I would short below here. Now there's a danger of a fake break here, folks, so if you're looking for a trade to follow me in on, this may not be the best one. Let's see if we get a higher swing here. The buyer's showing that they're going to try to give me some follow through. That could make for an interesting move. The Geiger counter a little bit more bullish as well right now, so maybe we'll see some follow through on that. And of course, if they move lower and drop through the bottom, then we may see a retest of the low of the morning as well. So we essentially have the opening range as our trading range. And you can see why we're not going anywhere. We're kind of trading right in the middle, and we know that buyers are usually down here, sellers are normally up here. Once again, our cloud really starting to twist up like a rope here, just adding to the neutrality of the situation. So the seller's reinforcing the 75.91 zone. We'll see if the buyers do the same here near the bottom end. Overall, the bid and ask is fairly light, although I did see 40-something orders go through there. It's really hard to trade when the market just keeps overlapping the same pricing. In fact, here if I build you a little 5-minute chart, it should be really obvious. So here now a 5-minute NASDAQ chart, and you can see how since the open, which was right around here somewhere, we haven't gone anywhere. And look at for the last 5, 10, 15, 20, 25 minutes, the market just really stuck going over those same prices. And these doji bars, not a lot of fun to trade. All right. Check out the bottom end of the range now and see if the buyers respond or if the seller's gonna push them over. All right. So they filled me to the short side. It looks like they're going to try to perhaps get down here toward the low of the day. I'm going to extend my break even a little bit. I'm going to put in a profit target, or pardon me, a stop loss. And I'll hold that for the moment. On the off chance that we get a little bit of follow through here. So if they get to, right now we're sitting on the median line. If we get below the low of the day, the primary support would be the next target. But we do have a few obstacles here. So we had the breakout. Here's the little itty bitty retest now of the breakout. We'll see if they come back with yet another sell signal. That should have some follow through if we get that short signal. All right, there's the short signal. Come on, engage it. If they engage it, I think I'll be a little bit more aggressive with my stop. There we go. I'm bringing my break even now below the low of this bar. If it forms, okay, I hit the break even. No, get going. Don't turn around yet. Come on, a little bit more. I could have put my break even above that swing as well. That would not have been terrible. Okay, just for argument's sake, let's see how I would have performed had my stop been above this swing. And this is how you're going to learn as well, is I mentioned journaling the other day. So if you get stopped out prematurely, just make a note of where your stop would have been and see how the trade would work out. Were you smart taking the early stop out, or were you a little bit too anxious on the trade? And maybe you should have waited a little bit longer. These are the things you'll learn by asking these questions. The market will answer, and then you make a note of it in your trading journal. And right now it's looking like maybe I was a touch anxious. See, at this point, I could roll my stop to here. Whenever you take out a swing point, whether it's a big one or a little one, the market will always give you a little bit of a reaction. So you need to anticipate that. It's a bit of a slow day today. And we'll see whether they would have tagged me out. It would have been a small loss, $100. But at the moment, it's looking as though I probably did all right taking the early stop out. As they continue to flounder. Rick, a great question here about the Geiger counter. Rick says, Eric, does the Geiger counter do something beyond visualizing the order flow? Um, the order flow is the big thing here for the Geiger counter, because normally you watch the order flow here, or you can watch the time and sales, which will drive you crazy. But the Geiger counter does give you a visual of what's going on. Now, it does use an algorithm as well to try to interpret what the order flow is doing. But yes, that's essentially what's going on here. So now you can see the needle is getting red. We're getting this sell spike coming through here. So if you were looking for a shorting opportunity, this would be very desirable. I know one of the Geiger counter owners, he swears by it. He says he will not take a buy or sell signal unless the needle is green or red. And he said he's had very good success doing that. In a way, I suppose it's a bit of a filter, if you will. So here the needle has gone red. We don't have a sell signal just yet. And sometimes what you'll need to do is, or what I do, is I will watch the needle relative to the center line. If it looks like it's starting to dip and I get, say, a number one signal, I'll be a little bit more keen to take that signal. Today, however, we're just flat. You can see they keep trading punches. No, they're not going higher, they're not going lower. Because the market did not follow through to the short side on that block of selling, that tells me that all the selling was absorbed and we may actually see a little bit of a rally as a result. These are all tools, right? These are all tools to help make trading decisions easier. Because that's the hard part. That's really the tough part, is making the trading decision. Yeah, Rick's asking, algorithm as in bid-ask spread analysis or pure volume or ... Honestly, Rick, I don't know. The fellow who actually developed the programming for the Geiger counter is a brilliant fellow. I've mentioned him before. He actually programs guidance systems for cruise missiles for the U.S. military. This is kind of like his side job. But no, he's an exceptional programmer, and honestly, I'm not privy to some of those things. They hold some of their programming secrets very close to the vest. Yeah, like Rick says, a really secret sauce. Yeah, it is a very secret sauce. I'm sure he would tell me if I asked him, and I probably wouldn't understand what he was telling me anyway. For those of you who have been in the room with me anytime at all, you know I'm not exactly a techno geek. It's not something that, not a term people use to refer to me as. All right, well, we are moderately bearish. Everything is in sync now on the short side with the Eagle band, the Raptor band, the Falcon actually producing a late filter entry signal. Maybe we'll show this one here. The late filter entry signal tends to be a very high probability signal. You do need to bear in mind that it is a continuation signal in most cases. Sometimes it will develop as the trend change happens, but more often than not, it is a continuation signal. So as with all continuation signals, you have to look back in your chart a little bit to see if you have anything to continue. And in this case, we only have the warning dot. We haven't had the signal print just yet, but we have had the filter go out of sync, come back into sync. There now, the late filter entry signal. And you know what? Again, if you're looking for a trade to do, I'm not sure that given the way the market is behaving today, you even want to throw any money at it. But this is how I would do it. You'll notice with the late filter entry signal as well that when the trend line is nice and flat, you tend to have a better signal develop as well. Now, this does have the potential, if we get below these lows, to catch some of the buyers on the wrong side of their trade. And here now on the Raptor, we're going to get Well, we already got the number one signal, so this is just kind of like your discretionary signal. So we've got the Geiger counter going red again. We've got a second push opportunity. So you've got the same type of setup now here on the Raptor as what we do here on the Falcon. You have the two signals kind of coinciding. And we'll see if anything comes of that. The big deal will be the low of the day, getting below that. And we'll stay here with the Geiger counter and the Raptor. And we'll see what kind of follow through we get. And we'll see how the market responds when and if it breaks below 75.75. You know there's going to be some orders to sell. The trader's looking for the breakout. You know there's going to be some orders to buy as buyers try to hold that 75.75 zone. Okay, so there now, the little bit of a reaction. I'm actually going to bring my break even up so that on the next push lower, I'll look at a break even. I'll do the same thing here on the Falcon, which is just about kissed the break even. Oh, excuse me. I thought I had my mute button on. Vincent's asking if I got his email. I haven't had a chance to check my email this morning, so I'll do that after I close the room. Or while we're waiting for this, I will take a look. Yes, okay. I got your email, Vincent, and yes, I will give you a call. I'm going to be out of the office, but I'll give you a shout on my cell phone, and we'll talk. Well, a very lackluster trading day today. And I'm not very happy with this little rally that we've seen come through here. Looking for the sellers to step up again, and that will allow me to adjust my stops a little. Unless the market is just going to continue bouncing back and forth within this sideways trading range, then things could get a little bit dicey. The only consolation I have with a trade like this is that my trade manager caps my risk. So I don't need to panic about the trade. If I've made a poor decision and I get stopped out, at least I know my risk amount was a loss I could afford. Because honestly, right now it's not looking all that promising. Sure, Rick. Rick asks, Eric, could you please review the order entry process with the trade manager? Absolutely. Now, a great way to learn to use the trade manager is just to play around with it, quite honestly. Go into sim mode, place some orders, hit some buttons, see what happens. That is a fantastic way to learn how to use it. Essentially, most times you're going to want to be in risk percent mode. This allows you to cap your risk at a certain percentage of your capital. By default, it is set at 1%. Normally, I have mine set at 2%. Generally speaking, 5% or less is considered prudent. If you click on this, you'll toggle between risk percent mode and manual mode. Manual mode will lock the number of positions you take to this value right here. If you're trading Forex, manual mode is a great way to contain how many lots you want to take. After that, it's really fairly straightforward. You click your set prices button, put your cursor where you want your entry to be, put your cursor where you want your stop loss to be, and if you have your profit targets preset, you will also get a profit order. Then all you need to do is click your submit button, and now your order becomes a live order waiting for execution. You can also click on this value down here where it says tick targets enabled to click targets, and that will allow you to manually set a profit target. Of course, profit targets can always be altered once the trade goes live, right? Once a trade is live, you can adjust your trailing stop. You can even adjust your profit objective. As you can with your break even as well. But yeah, like I say, play with it. Play with all the different stop strategies. See which one you like. See how they respond. You can try the different order types. It's pretty much, a lot of it is quite intuitive. Okay, here we go with yet another bearish push. Maybe we'll see some some follow through on this one. Absolutely here, Rick. Rick's asking about Top Step Trader. For those of you unfamiliar with Top Step Trader, um, they will actually give you money to trade. And how good would that be? Their trading requirements are rather rigid, but it is their sandbox. Rick's asking for the link. I put it in the window for you there. If you go to the Indicator Warehouse website, and if you search, go to the little search and search Top Step Trader, you will find all the information you need to know about Top Step Trader. It's well worth checking out, especially once you become a little bit consistent. We have had a few owners, more than a few owners, go the Top Step route. Many of them becoming funded. One even completed a $150,000 Top Step combine using the DTS system. Yeah, like Rick says, a pretty legit prop firm, and that they are. They're at least in my dealings with them, you know, as much as I've seen of them, they are very upfront. Okay, well, our patience paid off on that. It wasn't the best looking of trades, but it did work out okay. And again, you know, sometimes you're just not going to have all the pieces to the puzzle. You're still going to end up taking a chance. And really, at the end of the day, sometimes it just amounts to, if you can afford the risk, you take the trade. And it can be as simple as that. Well, after that move lower, it's kind of putting a bit of a bearish flavor on the market, but we're still, well, I suppose we're retesting, now that we're back here around 75.70, we're kind of retesting the top end of yesterday's trading range. Right, so there's the top end. Here now, the big drawn out retest of that top end of the trading range. It'll be interesting to see whether the buyers can muster a rally from here, because this is what we would anticipate, right? The market comes down, retests, rallies. Comes down, retests. We would or should anticipate another rally. And we'll see what they do with that. Overall, though, I think the rest of the day is probably going to be fairly dull. probably more of the same. And I think, looking here again at the daily, if we finish the day like this, that could have very, very bearish undertones for tomorrow, where market tries to continue to rally and it can't, and it's just kind of hanging there. That could make for a very, very bearish day. So for those of you, we'll have to see how it finishes, of course. There's still lots to go. But if the day finishes like this and you're trading overnight or early in the morning, look for a possible move lower, which would be a surprise, because after these two very strong rally days, I would anticipate more bullish follow through. But once again, the volume's not there. Things looking a little bit skimpy. Rick, there's no dumb questions. Rick asks, how do I change accounts in Trade Manager? Well, first off, you need to go to your Trade Manager. So you're going to go to your strategies. You're going to highlight your Trade Manager. You're going to turn off your Trade Manager. And now you can select from your accounts. So you'll go to your, whatever your account is, and then you can select your other account. You can also manually enter your account. Nope, sorry, change that. You have to do it from down here. Now you'll need to get your broker to hook you up as well. And if you have difficulty with that, email Ben. Ben will also walk you through that. All right, everyone. I think we'll wrap up shop here. It's almost the top of the hour. It looks like the market's still kind of in that bit of a sideways mode, which is what I would probably anticipate for the rest of the day. I can't really foresee any major moves coming. Look for a bounce off of 75.70. I'm not sure if it'll be a big one, but I think we can anticipate one. But be careful. It is a very, very sideways day today. I'll see you tomorrow. Bye for now.